Hello, everyone. Very warm welcome to all of you joining us today for this exclusive MSB Association webinar. I'm Sakshi Ngole and I'll be your host for this exciting session. I know many of you are already familiar with the MSB Association, but for those who are new, let me quickly explain what we do as a MSB Association. So, The MSB Association was started in 2024 with a simple goal to support money service businesses in the UK. Running an MSB is not always easy. There are many challenges such as banking issues, compliance requirements, and regulations. As a non-profit association, we aim to support MSBs by providing guidance, education, and networking. Our vision, objective, and purpose. So, our vision is to create a strong and trusted community for MSBs in the UK. Objective is to be your voice, supporting you with regulations, banking matters, and representing your interests directly to the authorities. And our purpose is to protect and professionalize the UK MSB sector by making it stronger through powerful advocacy, tailored resources, and strategic partnerships. So, what is the benefits or become a member? When you join the industry association, you gain access to many valuable benefits such as legal and compliance guidance, support during HMRC and FCA audits, introduction to MSB banking partners, introduction to wholesale currency providers, assistance in working with banking partners to release stock funds, guidance in selecting tools for your businesses, and all of these benefits are designed to help your businesses run smoothly and efficiently. So about the knowledge hub, as we continue to deliver a real and practical value, we have launched our How to CV covering critical topics for MSBs from risk assessment to FCA consumer duty or even how to start a currency exchange bureau. We have made it easier for you to navigate complex topics, so you can just scan this QR on screen to explore everything. About the webinars, so far we have covered 4 important topics which you can see on the screen. We'll continue covering important and trending topics like this in the future. To watch this webinar, you can scan this QR and check out the webinars. So about the members meetup, so till now we have received a fantastic response from MSB community at our events. So our first members meet held on 19 June 2025, and our second annual members meet held on 16 April 2026, where both are great successes with excellent networking and meaningful industry discussions. So most recently, we hosted our MSB Association Summer Meetup 2026 on 26 June, proudly sponsored by Peradera, and it was a fantastic evening with great networking and insightful keynote session, and of course everyone looking great in their summer hats. So about the Summer Meet Photo Award. So if anyone attended the Summer Meet, you know we had our best Summer Meet Photo Award game that time, and we know we are a bit late for this announce the winner, but today is finally the day. A huge congratulations to Mr. Giordano Cortez, Senior Product Manager at First State Exchange Service Limited, for capturing the spirit of the MSB Association Summer Members Meet 2026. Your photos are perfectly captured the energy, connection, and memorable moments from an amazing evening. As our Best Summer Meet Photo Award winner, he won one even free membership worth rupees 199 pound. So thank you to everyone who took part, shared their photos, tagged in MSB Association, and helped us to capture the summer meet experience from your perspective. About the Brit FinTech Awards, as 𝐂𝐀 Solutions UK Limited is an affiliate member of MSB Association. They are hosting the 3rd edition of Brit FinTech Awards 2026 on 9th October 2026 at Landing 42, 122 Leadenhall Street, London. So nomination, sponsorship, and ticket bookings are now open. So just scan this QR to explore all things. So now introducing today's speaker, And now for the highlight of today's session, I'm excited to introduce our speaker, Mr. James Forley, Director of Payment Services at Comply Board and also a member of jury panel at FinTech Awards 2026. So today, James will share his experience and insights into the evolution of FCA supervision and what this means for money service businesses today. So before we start the session, if anyone has any question during the session, please drop them in the chat section. So we'll pick from there. So without further delay, over to you, James.
Thanks for that, Sashi, and good afternoon, everyone, and thank you to the MSB Association for inviting me to speak to you today. As you'll see on the topic, it's tour through time on the supervision of payments firms and MSBs, bringing you right up and to today and what the FCA is looking for from you as we speak, which again, history is fine, but it's what the regulator expects of you today that's important. I'm Director of Payment Services at Comply Board. We support clients across the financial services sector. We have a department dedicated for payment services covering SPIs, APIs, EMIs and banks. And I myself spent 23 years at the FCA. I set up the authorization function for payments and e-money firms back in the day, and we'll get to that point in due course, and was also accountable executive for delivery of PSD2. So, very much immersed in payments regulation. So hopefully we can bring some of that out in this webinar, and hopefully some of your questions I will be able to answer at least some of them. So if we can start off with just an overview of the agenda, please, Sachi. So again, it's going to be just a tour over time, looking at the legislation, the impact on you from both HMRC and FCA perspective, looking at a couple of examples where things haven't worked from the regulator's perspective, looking at what the FCA cares about today. As I said, that's the most important thing, so that you are keeping the wolf from the door, so to speak. It wouldn't be a discussion with MSBs without touching on de-risking, so I'll indulge you that, but hopefully it's nothing new, but we'll cover that as well. And then at the end there'll be hopefully plenty time, because I was told to shorten this from our initial run through, plenty of time for your questions. So moving on to the first slide proper, please. So just setting out the legislative framework that we have here, and there are a couple of discrete pieces of legislation that bite on MSBs. Obviously, the first one foremost, the original piece of legislation with money laundering regulations, and then it's the payment services regulations. And sometimes, as we will see in the next couple of slides, they are in conflict, or there is confusion between the two. And the reason I've got two or payment services regulation listed twice is to reflect the 2009 version and the 2017 version. And then for completeness, we've got the electronic money regulations. And so the consequence of those pieces of legislation is that we have two regulators that are interested in MSBs, HMRC and FCA. One of the consequences of FCA supervision certainly is that by quirk of legislation, the Treasury at the time decided not to incorporate payment services within the Financial Services and Markets Act. So firms that are licensed to do payment services don't have a Part 4A permission in the same way as other financial services firms do. Similarly, they're not subject to the threshold conditions under FSMA, and they are not subject to the senior managers and certifications regime. In addition, for payments firms, the Financial Services Compensation Scheme doesn't apply. There is no appointed representative regime, and there is limited application of the FCA handbook. But on the other side, there are certain things that do apply for MSBs and payments firms. So not least of which, consumer duty, we'll touch on that later. Similarly, safeguarding, that is pretty much the topic of the day from the FCA's perspective. And instead of the handbook, you've got the approach document, which is a consolidated handbook, if you like, for payments firms. And I think it's great because, well, I had a hand in drafting it, but it is a one-stop shop for pretty much all regulation for payments firms. Instead of SMCR, we have PSD individuals, and if firms are e-money firms, they are EMD individuals. And at the same time, you've got the HMRC requirement for beneficial owners, officers and managers to be registered with them. Agents and distributors, if you have that model, then they fall under the FCA's requirements. And operational resilience, which again we'll touch on as part of the later slides. Next slide, please. So payments firms, MSBs, sometimes they're interchangeable, sometimes they're confused between what is what and who supervises what. The rule of thumb is that HMRC is the supervisor for AML purposes for most money services businesses. MSBs, as you know, 3 core activities: money transmission, check cashing, currency exchange. But only to the extent that they're not otherwise supervised by another AML supervisor. And that's what the legislation says in the money laundering regulations. So alongside this, the FCA authorises or registers firms to carry on payment services under the payment services regulations. And interestingly, there is a common activity that sits under both pieces of legislation, and that's money transmission or money remittance, depending on what legislation you're looking at. So the question is, well, who's the AML supervisor for MSBs? Is it HMRC? Is it FCA? And one of the helpful things that the FCA has put in its approach document is this description to say we are responsible for money laundering supervision unless the application relates only to the provision of money remittance services. So that pretty much says that for money remittance only, HMRC is the supervisor under the MLRs. If a firm is doing any other payment service in addition to money remittance, then it's the FCA who will be the AML supervisor. Confused? Yeah, don't be. The FCA gets this wrong as well, and I've had an instance where the FCA sought to impose a requirement on the firm to cease business on the basis that they weren't registered with HMRC, until we pointed out to them, actually, we don't need to be because we have more than money remittance in our permission. The FCA sort of said, okay, no further action. They didn't go as far as apologising, but that's fine. The firm didn't need to do anything further. Next slide, please. So HMRC registration, as you know, is going to be a core part of many of your requirements. This pretty much started in 2003 when money service operators were required to be registered by HM Customs and Excise, as it was called at the time. And then, you know, since they merged with the Inland Revenue, it became HMRC, HM Revenue and Customs. And then 2007 was the next impactful change to the money laundering regulations, when money service businesses were created. Effectively, there was a legal definition for those, and required formal registration and introduction of a fit and proper regime. And then that was superseded subsequently by the latest version that we have, which extended the name of the money laundering regulations, but most of us still call them the money laundering regulations 2017, which pretty much introduced other things that weren't of interest to MSB, such as crypto supervision, etc. So that's where we are with HMRC. Next slide, please. So where I have insight and value is what happened with the other regulator, the Financial Services Authority, which became the Financial Conduct Authority, which we'll refer to as FCA from now on. So payment services regulations first came in 2009, and at that time the FCA didn't really understand payments. It hadn't dealt with them before because there was no legislation requiring them to do that, so they didn't quite know what they were responsible for. So they set out with an approach to be risk-based, and that risk was, well, until we know what the risk is, it's going to be pretty much low risk, and that meant a reactive and complaints-led approach to supervision, which manifested in pretty much one person at the side of their desk, not even their day job. That was the extent of supervision of payments firms. So I described that as an absentee landlord arrangement. So the FCA had responsibility, but it wasn't really doing anything. So during the time between 2009 and the next iteration of regulations in 2017, the FCA experienced a number of firm failings, a number of issues at payments firms, which required it to think about its reactive approach. And so the PSD2, the Payment Services Regulations 2017, gave them the opportunity to revisit their risk appetite, and that resulted in the creation of a dedicated supervision department, initially of 30 people. It's grown beyond that. Today, I couldn't tell you quite what the numbers are, but yeah, it's certainly in excess of 50. And the whole department now looking at the constituency of small payment institutions, authorised payment institutions, and e-money firms. Over time, that has progressed. They've taken their responsibilities more seriously, such that, and the clue is definitely in the title here, they are now called market interventions. So it's more an activity-based title, which reflects the fact that the FCA is now contacting firms. It is taking definitive action, and you see this through the issue of Dear CEO letters, where the FCA will set out common issues that it finds across the sector, and its current version of that, a consolidated list of regulatory priorities. Next slide, please. So I just wanted to finish that off by saying that alongside that new version of supervision, there was also other firm failures across financial services, particularly London Capital Finance, which prompted what's known as the Gloucester Report. And that said, that overall the FCA is very lax at in its supervision of firm. It's pretty much relaxed at the gateway when authorising firms, and I know that because that was the risk appetite I applied when I was leading the team. And so that contributed to the change in the FCA's response from 2020 onwards, where the authorisation process was far more difficult. So when I was in charge, there was an approval rate of about 85%. And again, it's not personal to me, it's the risk appetite that was in place. Whereas 2020 onwards, that almost reversed, and only 10-15% of firms would get through successfully with their applications. And again, you've seen this reiterated with the Dear CEO letters and the regulatory priorities. Next slide, please. So market interventions, we've covered what that means in practice. The FCA has portfolios, so in terms of dealing with a particular sector, that is represented by a particular portfolio. And what we've seen in recent months is the creation of a portfolio dedicated to you guys. So there is now a remittances portfolio. Quite what that looks like, I don't yet know, because they are still recruiting for people within that, but it does give you notice that the FCA is very interested in you as a sector. So be prepared for some thematic reviews of remittance firms in particular. Be prepared for targeted firm by firm requests for information, and a lot of firms have been on the receiving end of these, particularly in relation to their client base, their onboarding procedures, transaction monitoring, and addressing financial crime risks, basically. And depending on how those answers go, there may be further work that the FCA requires you to do in terms of a skilled persons review of Section 166, which would probably be an in-depth, backward-looking review of your policies, procedures, governance arrangements, whatever the issue may be with the FCA. And not necessarily off the back of a 166, but even a 165 request for information, you will have seen, and you may unfortunately experience this yourselves, the FCA saying we are not satisfied with what we have seen, and we require you, or we suggest that you apply to have a requirement placed on your permission to stop doing business, either stop onboarding clients or stop accepting new funds until the issue that they've identified has been suitably resolved. Now, in many cases, that can be fatal to a business, depending on how you're capitalized, how you could withstand shocks to the system, such as a license suspension. So that's where the FCA's supervision is today. Next slide, please. So what we've seen, and we mentioned previously, was the move from the FCA to be more communicative with the sector in terms of those Dear CEO letters. They're also known as portfolio letters, and since 2023 through to today, there have been common themes, and these are the things that the FCA really cares about today. And hopefully there are no surprises there for you. So safeguarding is maybe number one on their agenda. I think financial crime is probably number one, has been for a while, but I put it at number one purely because of the changes to the safeguarding regime from May the 7th this year, where firms are required, or authorised payment institutions particularly, are now required to be CAS compliant. So safeguarding doesn't automatically apply for small payment institutions. They can, of course, opt in, but authorised payment institutions, APIs, have always been required to safeguard, but now they are required to undertake a safeguarding audit. And we'll talk about safeguarding in a little bit more detail shortly. The FCA is also concerned about prudential risk management, and that's your capital and liquidity. And many firms just aren't keeping track of that, such that if they are on the receiving end of a financial shock, they can't withstand it because they don't have the headroom, the capital liquidity buffers to enable them to do that. And this is where the wind down plan is so important. All payments firms are required to have a wind down plan. It needs to be reviewed on an annual basis. It needs to be operable, and by that it means you need to sort of test it to see that it works, such that when you do need to invoke it, should you need to invoke it, then it can actually achieve an orderly wind down without the firm going to an insolvent position. Financial crime, that's covering the traditional things like AML and also fraud, but also within that sector, there are links to operational resilience, and that's the capability of firms' systems to withstand hacks, outages, accidents, whatever. At the risk of having yet another highest priority, the consumer duty that the FCA introduced a few years back now, that was their flagship policy across financial services, and so that is something that is not going away either. And this is all about ensuring customers get good value from the products and services that are being offered by financial services firms, including MSBs. And particularly in your sector, the FCA is concerned about the clarity that's given to customers in regards foreign exchange pricing, and we'll touch on that a little bit more in a minute. And then there's a number of priorities that they have that they see manifest across all sectors within the payments population. Governance and oversight. Are you having regular board meetings? Do you have a board? Is your governance appropriate to consider the risks that are presented to the firm and manage those accordingly? If you have an agent's model, are you onboarding them appropriately? Are you supervising them thereafter? Does that look adequate? For foreign-based firms or firms that are coming to the UK from another jurisdiction, is there sufficient resource in the UK? Does the mind and management sit within the UK? Is the firm that's authorised in the UK able to make its own decisions? Operational resilience, again, say it once, say it twice. So I've said it twice. The FCA is looking to say, well, if your website goes down, what are the arrangements? How are customers impacted? What is the plan B for recovery? And then regulatory reporting. So the FCA has said, quite surprisingly really, that it's identified a lot of errors in firms reporting through reg data, and it's pretty much a straightforward ask is you are required to provide your own data, so how can you really get it wrong? But firms are getting it wrong. Either they're being careless with their inputs, or there may be something untoward going on, but take care on that. Next slide, please. So we mentioned price transparency under the Consumer Duty. So you can take away, we'll be sending out the slides after this webinar, but there are a number of key elements to this in terms of being clear with customers as to how the price that they pay has been calculated. Where does it come from? And this ties in with one of the principles for businesses, Principle 7, which requires firms to be clear, fair, and not misleading in all of their communications. So whether that is an advert, a website, or individual correspondence with a firm, they need to be as clear as possible, such that the customer can understand what is being said. So, the FCA has highlighted a couple of instances where there is an FX markup, but nevertheless it's being claimed as zero cost. It implies that there are hidden, unclear fees. It doesn't explain what margin is, terms that are familiar to the FX practitioner, but not to the lay customer. So these are things that the FCA, has written to firms about, and it's very much sort of looking at the MSB sector because of the nature of the remittances and the FX that usually goes with that, requires you to just reflect on customer understanding. Do they know how much they're paying? What exchange rate they're getting? Where that comes from? What the markup profit is? And how much is actually going to be received when the remittance is made. So take that slide, reflect on what your own practices are, and if there's something that needs fixing, go fix it before the FCA comes knocking. Next slide, please. So safeguarding we touched on earlier. That is the most recent hot topic. Whether it's number one or not depends on your point of view. For me, I didn't see too many wholesale changes in the safeguarding requirements. There are a few, but generally for me it was hard coding some of the expectations that already existed. So there was already an expectation that relevant funds received from customers would be safeguarded D+1. You would have daily reconciliations, both internal to your core banking and external to your external bankers, so that the money that you were required to hold under safeguarding was actually sitting in the bank should it be needed. There would be obviously a relevant update to your policies and procedures to reflect the new rules and requirements, and those were articulated at great length within CAS 15. So again, if you want some bedtime reading and you haven't read it already, CAS 15 sets out what your expectations are, part of which is getting updated acknowledgement letters from your safeguarding banks, undertaking a monthly Rep 027 return, so yet another return to the FCA that is quite lengthy, quite detailed, but it's the best tool that the FCA has, in my opinion, to get a sense of what the safeguarding position is across the sector, because rather than sending an annual questionnaire on your FSA 057 or an annual audit return, this is something that is more regular, and the FCA gets sight of it. CAS resolution pack, so this is primarily for the benefit of any insolvency practitioner should things go in the worst case scenario. That enables them to come in and see where the documentation is and quickly get up to speed to ensure that money can be repatriated to customers as is due to them. Governance and responsibility, again, it's a reiteration of what we said earlier, that governance needs to be robust. You should be looking at safeguarding on a regular basis. It should be a standing item on board agendas. Depending on your side, you will possibly have a subcommittee that's dedicated to safeguarding, and you are required to appoint a designated individual for safeguarding. So that's the next step, almost to a senior managers and certifications regime. And of course, this all links to wind down planning. So the idea is, if you are in wind down plan, part of that process will be returning funds to the originator, or ensuring that they are remitted to the payee. And of interest here to me, because I've done dozens of safeguarding audits over the years, and similarly Complyport has done those audits. Now, from the period from 7th of May onwards, that period needs to be audited by an external audit firm, so a firm of accountants qualified to do audits. It doesn't have to be Big Four. If you don't know where to go, talk to me afterwards, we can make those introductions. But effectively, all APIs will now have to do an annual external audit. Previously, they only had to do that if they couldn't take advantage of the small companies exemption under the Companies Act. So that's, I think, is one of the biggest changes there. But otherwise, it's codifying what was already expected. Next slide, please. So I said we'd have to talk about de-risking, and hopefully it doesn't generate too many questions that I won't be able to answer. But payments firms have always been seen as high risk by banks, and especially MSBs dealing with remittances, and probably more so those that deal in cash, because obviously the anonymity that may go with that gives rise to financial crime concerns from the underlying bank that makes them nervous. So over the years, since payments regulation was first introduced and the safeguarding requirement was first introduced for APIs, banks have gradually, suddenly, depending on what period of time you're looking at, exited relationships with MSBs and payment institutions, and that's gone on, as I said, for a long time. The FCA at the time and continually thereafter have, on the one hand, said that, look, this is not anything to do with us, it's a commercial decision for the banks, but at the same time, on the other hand, said, well, actually, we don't want to see this wholesale de-risking. So I'm not quite sure, they're mixing their messages and not actually doing much about it from our perspective. With the Payment Services Regulations 2017, there came a new regulation, 1051A, which pretty much said that banks need to provide access to payment firms for accounts. And a lot of payments firms, MSB, said, great, banks have to say yes now. Well, that's not what it says. It says that they have to give access, but on a proportionate, objective, non-discriminatory basis, what's known as POND. So that means that as long as they can explain that their decision is proportionate, objective, and they haven't been discriminatory, they can still refuse to open an account for you or offboard you. So that's, you know, helpful, but not entirely satisfactory. So regardless, you know, all banks, when they're onboarding clients, will need to set out their criteria for acceptance, and each customer application needs to be assessed on its own merits, and they will have to have a risk-based assessment on that basis. Again, conversely, when I've done audits in the past, and one of the requirements of the FCA historically and today was that you should have a criteria for selecting a safeguarding provider, and that you should evidence the assessment and decision to appoint said safeguarding provider. Now, the amount of times that I've come across firms where, you know, they literally said, well, they're the only ones that said yes, they could only get one safeguarding account, and that is a reality. And so the FCA, as part of its consultation, suggested that firms diversify their portfolio of banking and have a number of safeguarding accounts. And I'm sure everyone would love that to be the case, but from a practical perspective, it's very difficult, particularly for MSBs. So consequently, the FCA said, well, no, we would encourage you to do that, but it's no longer a requirement. And then finally, I just add here that to me, probably the only advantage of Brexit for financial services firms and payments firms is that you're not restricted to opening a safeguarding account with a UK or EU bank. You can go outside, you can go to any OECD country and get a safeguarding account. Obviously, you need to consider, you know, will they open a CAS compliant account? What time are their cut-off times? You know, when can you do the reconciliation according to their settlement times? Those sorts of things. But again, in theory, you've got more options. Next slide, please. So that's pretty much where we are today. There are always going to be changes coming along. What I would encourage you to do, if you haven't already, is look for HMT's consultation on modernising payment services regulation. And this is pretty much a catch-all. Yes, it's looking at things like open banking, stablecoin, and such like, but it's also looking at updating the framework for payment services and e-money firms, part of which would be streamlining the existing Schedule 1 to the payment services regulations, and that is the list of payment services that a firm is allowed to undertake. So money remittance, I don't think it's proposed to change. Everyone knows what it is, so that will stay as it is. But if you are looking at maybe operating a payment account, there are 4 different payment services that deal with a payment account, and one is placing money on a payment account, one is taking money out of a payment account. And for me, you know, you can't have one without the other, so I think there's going to be a consolidation there. They're also looking at giving the FCA more powers to make rules directly, so it doesn't have to go through the updates to the PSRs in any respect. It can go through FCA rules. You will be looking at enhanced accountability for financial crime, and so similar to the responsible person for safeguarding that we mentioned, that may look a bit like the senior managers and certification regime, so it may be that the MLRO or the person responsible for financial crime prevention has a similar status within the firm, but we'll see. I'm not sure that there's any mention of HMRC, and this is in the context of what we talked about right at the beginning, where HMRC has responsibility for registration and supervision of MSBs to a certain extent, but why don't you tell HMT what you think? You know, it is genuinely an open consultation. So whereas they may have asked a number of questions specifically, they are inviting the wider community to, you know, make some suggestions as to how they can make legislation better. So, you know, have a look, make your comments known, and be part of the solution. And I think that's about it in terms of summarising what we have. We can just touch on the next slide. So yeah, I mean, you know, we've seen change from the FCA over the years. The FCA has said, look, you know, if you come to our attention for one thing, we are going to take the opportunity to look at other things, and that's a consequence of them not having done anything really for many years as an absentee landlord. Governance, that is central to everything. If you've got poor governance, you're unlikely to have good controls, good compliance. From the FCA's perspective, it's all about the consumer and their outcomes, so pay attention to those, and do expect a knock on the door. You may not have had it, you may have had it already. It can come at any time for whatever reason, so concentrate on being compliant with the rules, making sure your regulatory returns are accurate and issued on a timely basis. But if you do get it wrong, you can expect the FCA to sort of you know, be harsher. We have seen already a number of voluntary requirements or VREQs imposed on firms. Whilst they're voluntary, they're not really. So effectively, you know, you want to keep away from that as far as you can. If you have any issues, then get help. I think you'll see on the next slide, please, my contact details. Hopefully at other events with MSB Association, please, if you see me there, come up and talk to me and ask me a question. But with that, thank you very much for your time, and hopefully I can help you with some of the questions that you've raised.
Okay, so James, we have some questions in chat box. Okay, I'll read it out for you.
Okay.
Okay, so first one is, if an MSB wants to expand its services or business model, when does it need to notify or seek approval from the FCA?
So this is what's termed a variation of permission. So when you apply to get your license, you apply for the appropriate permission. So whether you're an SPI or an API, you can choose from the list of payment services that we refer to from Schedule 1. If we're talking MSBs, then typically it will be money remittance. If you want to add something else, like what we mentioned, a payment account, you have to ask for FCA's permission before you can start doing that business. Now, that's another variation of permission application form where you have to describe in detail, well, what are your arrangements to do that extra line of business? The FCA is not just going to say, well, you're already registered or authorized with us, we'll give you that new permission. It will assess it almost as if it's a new application. So it is an application, it is a process, it can take several months, but bottom line is you can't start doing that activity unless you have permission from the FCA.
Okay, thanks, James. Next question is, as you mentioned earlier in the webinar case where HMRC supervision was not required by a remittance firm, so please, if you can elaborate on that.
Yeah, so it's all about the permission that a firm holds. It is, I mean, to my mind, it's quite simple, because I was talking about it for many years at the FCA, and very few the FCA or HMRC quite got it, because they were saying, well, we're responsible. No, you're responsible. But the bottom line is, if you are a payments firm with only money remittance in your permission, you are subject to HMR registration and supervision for AML purposes. If you have any other payment service within your permission, then it is the FCA that is your AML supervisor, and you don't have to do anything with HMRC. And going back to the first question, if you vary your permission to add something in addition to money remittance, then you can remove yourself from the HMRC register on the basis that the FCA will now take responsibility for you as under the money laundering regulations.
Thanks, James. Next question is, any concerns if the UBO is purely not a UK resident?
Yeah, so that isn't a problem, until it is a problem. So it's not, at first blush, if the UBO is resident overseas, that is fine. You can have ownership of firms outside of the UK. What is important is the management of the firm, which needs to be in the UK. So again, depends on what activity the UBO is taking. They may wish to be a director of the company. That also is fine. They can be a director and based overseas, but the FCA would look for the majority of the board of directors to be resident in the UK. So you need to think about, well, can we satisfy what's known as the minder management requirement? Essentially it's a UK business run from the UK, because it's going to be supervised by the UK. So if the worst comes to the worst, the FCA wants a door it can knock on with actual real people to answer its questions.
Thanks, James. Next question is, if an MSB wants to onboard agents, when does it need to notify or seek approval from the FCA? Can the safeguarding bank account be held in USA, Asia, or elsewhere apart from the UK?
Was that one question or two? I think there's two parts to that. Yeah. Can you? I know the second one, so I'll answer the second one because I forgot what the first part is. So I'll ask you that one. But yes, I mean that's one of the only benefits of Brexit, as I mentioned, is that if the safeguarding institution is based in an OECD country, and that's pretty much everywhere in the world, then you can open a safeguarding account, or you can apply to have a safeguarding account with those institutions. And what was the first part?
If an MSB wants to onboard agents, when does it need to notify or seek approval from the FCA?
Yeah, so interestingly, because there have been such poor practices from payments firms in terms of onboarding and supervising their agents, the FCA has in recent times placed a restriction on new firms' permission to say you cannot appoint agents. Now, whether you've got that on your permission or not, if you want to appoint agents and you didn't have that as part of your application to the FCA, you must inform the FCA before you appoint agents, because effectively the FCA has given you a license based on a business plan that you gave them last year, a couple of years ago, even longer before that. And if that didn't include dealing with agents, then this is something new that they haven't assessed. So they would absolutely want to ensure that before you appoint those agents, you have robust systems and controls to do the due diligence, and thereafter, once appointing them, that you will be having regular supervision of those agents. So yes, if you haven't appointed agents yet and you want to, you should be asking FCA permission first, because when you submit an application to appoint those agents to the FCA will not appoint those. They won't register them, and they will have a conversation with you.
Thanks, James. Next question is it compulsory to have wind down plans for small payments institutions as well?
Oh, that you know what? I'm not 100% sure. So I think for small payment institutions, it's if it's not compulsory, then it's certainly best practice. But as we said, if we don't get around to all these questions, we can sort of follow up in writing afterwards. So I will certainly do that, because my mind's gone blank, I'm afraid.
Thanks, James. Next question is, if the businesses is solely money remittance, should the firm expect FCA visitation?
So this is where HMRC and FCA differ. So HMRC definitely has a program of supervision that is typically, well, quite often face to face. So they'll come to your premises and do an inspection. Sometimes it will be desktop. The FCA, not so much, as we've seen over time, and never since 2009, the supervision of firms has been sort of pretty much reactive. There is not a program of regular visits. And I was talking to a colleague previously when I first started in regulation back in the 1990s. It was a smaller regulator with a smaller constituency of firms. So we had high risk, medium risk, low risk firms. You'd visit high risk once a year, medium risk every 2 years, low risk every 3 years. But every firm got a visit. That does not happen. So you will be unfortunate if the FCA wants to come and visit you.
Thanks, James. Next question is, an agent remittance company with no SPI API license looking to launch stable coins still be supervised by HMRC?
Again, it's difficult to say. I mean, once you mention stablecoin, then you're brought into a whole new legislative framework potentially. So it would be one that I'd have to sort of look at the detail in terms of the payment flows, etc., before giving an opinion, I'm afraid.
Thanks, James. Next question is, what we as an association can do to make FCA to allow open account directly with the Bank of England?
So that is a high bar, and there is a process going through the RTGS process, which we have seen a client recently want to get direct settlement with Bank of England, and the FCA is requiring a skilled person to do a thorough assessment of its systems and controls in order to make that recommendation to the Bank of England. So it is a convoluted process, but certainly again something that we could explore separately if the inquirer wants to sort of make contact.
Thanks, James. Next question is, what happens if a change in control is not reported to the FCA before it occurs?
So do you want the official version or the real version? So the official version is that it is a criminal offence to acquire control in a regulated firm without first seeking permission. And again, this was an area that I worked in at the FCA, so I know it quite well. And that is that one of the mantras was that licenses are not for sale, but we'll park that for the time being. Practically, this happens a lot. They're termed as post notifications. They are frowned upon by the FCA, but to my mind, I think there have been very few, if no, prosecutions made. So whilst it's a criminal offence, it's very difficult to do anything about it. And depending on the circumstances, the FCA will take a risk-based decision and choose not to do anything other than remind the controller, because it's the obligation of the acquirer of the controller to make that notification, to say, look, don't do it again.
So next question, James. There are 2 points in the question. First is, does consumer duty apply in B2B? And second is, what do you do if you make mistake with REP 27 and release after submission?
Okay, so consumer duty does apply to B2B as long as the business that you are providing services to fits within the definitions, and again we can follow that up in terms of being a micro enterprise and within the scope of consumer duty. But it's not as easy to say, well, it's B2B so it doesn't apply. It can do. So again, you'd have to look at who those customers are on the B2B side. If you make a mistake on Rep 027 or indeed any return, you do have the opportunity to fix it. And again, try not to make those mistakes, because if you make it once, you may get away with it. If you make it more than once, the FCA will say, actually, the firm's got an issue, it doesn't know what it's doing, and invite further scrutiny. But effectively, if you make a mistake, please do correct the information that you've provided.
Okay, thank you, James. This is the last question. So, if an agent is looking to launch another jurisdiction, should the HMRC be informed?
So I didn't quite hear that. It's launching in another jurisdiction, was that?
Yeah.
I don't really know, to be honest, because once you go outside of the UK, I'm not sure the HMRC is terribly interested. Similarly, if you were doing that from a FCA's perspective, I think the FCA would be expecting you to tell them that that's the case, but they're not particularly interested otherwise. But I'm not sure if there's an actual requirement to tell HMRC.
Thanks, James. Okay, so thank you, James, for such an insightful and informative session. I'm sure our attendees have gained a much clearer understanding of how FSA and FCA supervision has evolved since 2009, the difference between FCA and HMRC responsibilities, and what the FCA expects from the MSB today. And of course, a big thank you to all attendees for joining us today. If you would like to continue benefiting from our sessions like this in future, we would love to welcome you as a member of the MSB Association. Just scan the QR or visit the website to join MSB Association. So as I mentioned previously, 𝐾𝐬 Solution UK is hosting third edition of the Brit FinTech Awards 2026 on 9th October 2026. So nomination, sponsorship and ticket bookings are now open. So scan this QR and explore all things. So until next time, stay compliant, take care. Thank you, James, and thanks all.
Okay. Bye-bye all.